Good morning. It's Friday, October 24th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So it's all about inflation data and trade talks. And the wait is nearly over here for the inflation data that is expected to be a key for the Fed's policy meeting here next week. Now, why is CPI coming out? Well, the Social Security Administration, they need to complete their third quarter inflation data to calculate inflation adjusted benefit payments. So you look at the core CPI inflation, which excludes the more volatile food and energy costs, is expected to show a slightly less pickup here. Economists are projecting core CPI right around 3% month over month in September. It's about the same pace as August. You look at the annual growth rate, that's expected to be 3.1%. That's the same rate as August as well. The U.S. government shutdown is in its 24th day. So you look at the U.S. equity markets, they are pointing for the potential for new records. You got the NASDAQ up about 0.5%, 25,378. You also got the S&P 500 up 0.3% at 6795. That's up 20 points on the S&P, the NASDAQ up 124, and the Russell recapturing 2,500. So Wall Street, it really rediscovered its appetite for growth and momentum stocks, and that's what pushed the equity markets higher during the back half of yesterday's session. We saw some confirmation that Trump and Xi Jinping, they're expected to sit down next week with the first face-to-face meeting between the leaders here since Trump had taken office here on the back of the keys to the White House in January. So you look at soybean futures, they did bump up here yesterday, up at 1043 on the November contract. You also have the January contract at 1061. So a little bit of a boost there. We're also seeing a boost here on copper and some of the other key commodities as well. You see Trump, he's already talking about the prospects of a trade deal with China, and he's really dangling this extension out and a pause for those higher tariffs on Chinese imports in exchange for resumption of China's purchases of American soybeans. So that was that rally that we saw here yesterday, along with a crackdown in fentanyl and Beijing backing off those restrictions on those rare earth metals. Now, you look at rare earths, the U.S. earlier in the week had made a deal over with Australia. Australia is one of the larger, it's the fourth largest exporter of some of those rare earths, and the fourth largest, that's a confirmed discovery of some of these rare earth and critical minerals. So you look at the precious metals here, you look at the critical levels that I'm watching here today, because you do have some weakness going on in the gold and silver market overnight. You got gold down $72 at 40.72, so it's got about a $100 range overnight. 41.59 being the high, 40.60 being the low. We're just off the lows right now. You go into the silver market, it's down about $1.01 here at 47.69. That range here, about $1.40 on the silver market. So not quite the ranges that we've been seeing here recently with $2 fluctuations back and forth. And then you got copper down about 2 cents here at 5.09, but hitting up at that 5.15 level, pushing into some of the recent resistance levels we've been watching here on the chart. So gold, the critical levels of support that I'm watching, 40.21.20, that was the October 22nd lows. And then you look at Wednesday, Thursday, and then last night's overnight highs right around that 41.75 region. That's going to be your resistance point. You go into the silver market, 46.82, the October 22nd lows, and then 46.70, the October 10th lows. That's going to be your levels of support. So about $1 lower from where we're trading at right now. So you get a checklist on the pulse of the markets, the trends, the FX. You really want to look outside of the box. What are the key drivers here of a lot of these different markets? It always starts with the dollar index here, just fractionally higher here, up about 10 basis points at 98.82. Now, this comes on the heels of the Canadian dollar down about 25 here as Trump slams the brakes on a trade deal with Canada. Now, why would we look at the Canadian dollar in relation to the dollar index? Because of the fact that, remember, the dollar index is a basket weighted of 6 different currencies. And if you look at the Canadian dollar, it makes up 9.1% of that inverse basket. Now, you go to 10-year Treasury yields, they naturally crept back up to this 4% as we do come into CPI. And then you look at the November VIX futures here, down about 22 ticks right now, sitting below that 20 level. That's that critical threshold where people's hair gets on fire and the U.S. equities go absolutely berserko if we get above that level. So we're sitting at 1871 last. Now, gold volatility, that's something you could all track here. If you got a trading view, you can put that in as well as GVC. And if you got trading view, you can trade through us at Blue Line Futures. So we work with them and we partner with them as well. So 26.68 is where that gold volatility is at, and it's collapsing below that 30 level here after peaking last Thursday at 32.95. Now you look at some of these global markets here. You got European stocks. They gave back some of the early gains here, kind of on some mixed earnings, some contrasting French and German economic data. Germany's really been struggling recently and looks like the potential for going in some kind of recession. Now you look at Asian stocks. They did advance, and it's the confirmation between Trump and Xi Jinping's meeting on Thursday here. So you're seeing the MSCI Asia Pacific Index. It broke its 3-day losing streak here, rising about 0.4%. You got Taiwan, it was closed for a holiday. Now you look at some of the earnings, some of the market moving data here. You got of the 141 companies that were reported so far, 85% have beat some of the analysts' forecasts here, while 14%, less than 14%, have missed here. So you get back into the central banks and what the Fed's thinking and what the CME Fed Watch tool is looking at as far as interest rate cuts. We're in that external communication blackout period as well. You go to the CME's Fed Watch tool and you got a 98.9% chance of a 25 basis point interest rate cut, 1.1% unchanged. And then you get into those flows, those ETF flows here, because we saw sells in the gold market, sells in silver, and sells in platinum. So what happened is when you had that big sell-off that we saw, you saw quite a bit of dip buyers come in. Yesterday, we get that euphoria, that lift back up. You saw them spit that out as well. So the exchange-traded funds, they cut 133,000 troy ounces of gold from their holdings. And then you look at the total gold ETFs, they rose about 18% this year to 98.5 million ounces. You go over the silver, they also cut about 3.29 million troy ounces from the holdings in the previous session. And then you look at the gold-silver ratio, something always interesting to watch here. Not actionable, but interesting at 85-1. So just kind of hovering there, anchored between the recent lows, 82, the recent highs, about 88, and just sitting here in the middle waiting for some direction. So really, copper's been one of the best markets recently. Gold's been one of the more anchored. Silver's been much more volatile here in this price action back and forth. Oil getting a bit of an extension higher, getting some you're getting a little bit of tightness on the inventories. You're also getting some pressure on Russia, India for buying some of those Russian oil supplies here. So we're seeing some of the inventories come down here and some of the pressure being put up here. And then you look at Bitcoin. We saw that, I believe it was JP Morgan. They increased their outlook on CoinDesk. And then also you're seeing some of these larger financial institutions are taking in cryptocurrencies for collateral for trading other security products. So Bitcoin, Ethereum, Solana, XRP all starting to turn up here just a bit. So it'll be an interesting session here, interesting week looking at those developments between US and China going into next week. We'll see if there's any real action here because of the fact that that data is so old as far as CPI. And then you look forward at what the October CPI, if it was to be released here, I believe that it would come in at lower levels because of the fact that we saw some reprieve on agricultural products, we saw some reprieve on rent, and then also some of the energy products as well. So you guys got any questions? You want to open up futures trading account? Great weekend to do so here. It takes about 5-10 minutes. Shoot an email to info@bluelinefutures.com. Remember that futures and option trading does involve risk loss. May not be suitable to all investors. Good luck, good trading.